In this video, I'm going to cover how to invest in shares in the US from Australia. So I wanted to show you guys the interface involved in purchasing shares that are international shares and what the platform looks like, because there are slight differences and also things to consider. So first off, when you're investing in US shares, there are different tax implications. If you don't complete what's known as a W-8 BEN form, you'll be taxed at the maximum rate of 30% on shares. So I'll cover that a little bit. If you've come across stocks that you've heard of, such as Amazon, Google, Facebook, Tesla, and the list goes on, these shares are international shares, and the process in purchasing these shares are a little bit different to, say, purchasing a bank stock or any other stock on the ASX exchange. So generally speaking, I've only really followed mostly technology stocks, but if you're interested in looking at the process, what's involved, how the interface looks like, this video is for you. So let's go straight into it. Alright guys, so this is Commonwealth Bank International Trading Platform. It is slightly different to the platform you use to buy Australian stocks. As I mentioned, you will have to complete something known as W-8 BEN form, which is this form here, regardless of which bank or broker you go with. So what is a W-8 BEN form? So idea is if you don't have the form completed, much like income tax, you'll be charged at a maximum 30%. So for example, if you buy $10,000 worth of Apple shares, you sell them, you're going to be taxed $3,000 out of that $10,000. So it is important that you do fill it out. If you have the form filled out, when you do a sell trade, there'll be 0% tax on the sale proceeds. You'll still get taxed, at your for your capital gains, but that's a bit separate. And yeah, 15% compared to 30%. So make sure you get that filled out. But other than that, you can get that organized through your bank. Give them a call. The form looks like this. Basically, you're filling out your general details, so like your name, address, as well as signature, date of birth, and a few other forms. So take a look at that. I won't get into that too much, but yeah, so you've got this trading platform here. You'll have to transfer funds from your actual bank account, right? So when you transfer, say, 10,000 or 5,000 Australian dollars and you want to invest in US stock exchange, you're going to convert that into US dollars within this platform. Now, if you put in $10,000, you're probably going to get something like 7,000 US dollars. So, and you do that through transfer funds. But let's take a look at the platform, which is why I sort of made this video, to give you an idea of how you go from thinking about buying international stocks. Say, you've been following Amazon for some time, you believe the growth is going to continue, and you want to invest some money in there for a long time, for example. You can't just buy Amazon stocks the same way you would as American stocks. So now you're on this screen, similar sort of thing. You've got portfolio, transact, research, and tools. Let's go to tools first. So this is where you would have your watch list. Don't take this as my particular stocks that I'm looking to buy. These are just some example stocks from the Nasdaq stock exchange. So they're mostly tech stocks that most people have heard of. You've got Amazon here that I mentioned earlier, Google, Microsoft, Nintendo, Tesla, Facebook, Twitter, Alphabet, Square, and Atlassian, so a software company. Let's take a look at research. So under research, you're going to have the US markets, and similar to, I guess, most stock exchanges, there are main sectors that they're broken down into. So you've got the health technology, health service, electronic technology, transportation, retail communications, producer manufacturing. I think the sectors are slightly different. Within Australia, we've got consumer staples, minerals and materials and things like that. So I would recommend, if you're looking to invest in international stocks, stick with an industry that you're most familiar with to begin with. Do as much research as you can. Make a short list of stocks that you're considering buying. Look at the history of where it is. Is it priced in already? Has it had a recent run in the media? And is it overvalued potentially? So the idea to make money in stocks is either to buy them at very discounted prices or to invest in stocks that have great fundamentals and are going to continue to grow. So having said this, if you choose a sector here, for example, you go with technology services, you'll find that you've got a lot of these sort of larger companies. You can see 3-month performance and 1-year performance. So if you invested in Square, which I believe is a commerce merchant facility, you would have had doubled your money, a little bit more than that. So let's look at some stocks specifically and see what the interface looks like. If, for example, we go into here, let's say I'm interested in Amazon. I'd bring Amazon up, click on the ticker symbol, which is AMZN. Very similar to my last video, you'll see that you've got the last price, the most recent change, what the most recent ask price is, most recent selling price. This is obviously, market is closed at the moment, and you've also got the most recent news. So this is, it does run a little bit slow. I'm not sure if it's my internet today, but interface is still very good. And then you can look at the chart. So if you look at 6 months, you can see Amazon has done extremely well. Over the last year, it was sitting at around $1,000. Now we're on 2,000. So even Amazon in the last 12 months has done really well. Not saying that it's going to guarantee to keep doing well, but Amazon is one of the stocks that I think, with Jeff Bezos behind it, will continue to do well. And you can choose further interactive charts. So this here shows that, you know, if you bought back in 2015, you could have picked up Amazon for $400. So 500% times your initial investment, not a bad investment at all. So what else I want to show you guys? So if you go under earnings, you can take a look at the annual earnings. It gives you more financial information based on their earnings per share, as well as, you know, quarterly earnings, and also close competitors. So yeah, there is quite a bit of information here. But what I would be doing, and I discussed this a little bit at the start of the video, is looking at industry that you're familiar with. Find out as much information as you can about companies that may be up and coming or very well established and have a track record of performing very well, and invest in more blue chip stocks if you've got a lower risk appetite. And you know, you can invest in slightly more speculative small cap stocks if you start becoming a bit more comfortable, but there's no rush to get into stocks. If anything, let's go back. I think stocks can, you know, at this point in time, are a little bit valued in as a whole. So if we go to, I want to take a look at the Nasdaq as a whole, and you'll see that, you know, markets work in cycles. They tend to go up and down, and over the span of 10 years, there often is a big correction at some point. Stack Exchange, and we take a look over the last 5 years or even longer. Let's go maximum. You can see since 2000 there was a big .com boom, a very steep incline in price, and then there was a massive crash over the next year or two, and we've steadily increased. But you can see from 2009 up until now, it's been about 9 years, and that's, to me, is a bit worrying because it's quite steep, and we may have a 30, 40, 50% pullback on the exchange. And if you think about what Nasdaq is, it's 100 tech stocks, or whatever the index is, and as a whole, if all tech stocks are increasing at this rate, there's a good chance there might be some pullback. So that is always a risk as well. So idea is to invest periodically if you think that prices are going to go up. Otherwise, you can always hold off, and if you're a bit worried during these periods, sometimes just having cash and not investing is the right idea as well. So anyway, I won't go into that too much anymore. Hopefully this has given you guys a bit more insight. It's really not too different to invest in US stocks being based in Australia. You just need to fill out a few different forms, get the transactions set up, do your do the setup, do the exchange rate, and then make a short list of stocks that you want to buy. And then if you do want to transact, I'll just show you guys real quickly. So you can choose same sort of deal. You've got buy, sell, and sell all. Click buy. Let's say you're going to buy Amazon. That should bring up Amazon. You see the share price here. You've got previous close, bid size, etc., etc. Let's say you want to buy 50 Amazon stocks, and you're buying it at market, which basically means the last price. This is going to buy it at whatever the cheapest price you can get at that point in time. But if you're not looking to buy straight away, you can have limit, and this is probably always a better option. And then choosing the price that you want to purchase the stock for that day, or maybe you're waiting for a dip, you're expecting it to reach in the next couple of days. So let's say you're willing to buy it at $2,000 because that's sort of the range it's been in for the whole day. You choose your option duration, which is for the day or goods till cancelled. Generally you choose for the day, because if you're going to have goods till cancelled, you might not catch why a stock is crashed significantly, and you don't want to sort of have a situation where you've bought a stock without following the news. So anyway, after that you'd hit review and then complete your order from there. Alright guys, so I'm going to end it at that. Hopefully you guys got a little bit more insight into what it's like to buy international stocks. It's very much the same, slight differences, but yeah, there's all the information of like around the news and fundamentals that are like the official announcement you can find through your banks, but it's always wise to do additional research on various other sources as well through news. Alright, so thanks for watching. This video covered, as a recap, we went over what forms and the setup process. So things like the W8 BEN form, having your account set up so you can do international trades, completing the required documents, and also transferring funds into your international platform, which will be calculated at the exchange rate of the bank that you're using, right? And then after that, I showed you guys a little bit about the interface, what it looks like. It's similar to the ASX with slight differences, and also discussed different ideas and ways that you can look at researching your stocks that you might have heard of, how you can add stocks to your watch list, and then going on to look at, wider research, looking at industry trends, sticking to industries that you're comfortable with and you have the most knowledge on, and doing a competitor analysis, as well as threats, opportunities, and how that industry may sort of how they would perform in a bear market where there's a big crash in stocks. So an example of this is traditionally consumer staples have done really well during bear markets. They've either been flat or if not increased by a little bit, whereas stocks like technology stocks are notoriously volatile during big corrections. So just look out for that. Look at understanding setting up stop losses, understanding how much you're investing, as well as looking at what point will you be selling and what are your goals. So for example, if you're very risk adverse, you probably want to stick to the safe stocks, although nothing is ever guaranteed. You generally stick to the blue chip stock equivalents in international stock.